Okay, here we are. Welcome back, everybody. What a week. What a crazy week. We've got Friday, November 22nd. What is the MicroStrategy price? MicroStrategy is at, what do we have? $428 is what it closed the week at. Bitcoin, $98,951 as of right now. And what else? MicroStrategy ranked 103rd largest U.S. company. I don't know if you guys checked out the the post today, but MicroStrategy is still not as big as Sherwin-Williams, the paint company. So we're behind paint. I think we're just barely ahead of waste management, and I think we got a lot higher to go. So anyway, we had an enormous week this week. The trading volume was absolutely insane. This was the largest trading volume of any stock this week, I think, completely. Yesterday, there was 100 million shares that were traded. It was the most traded stock in the entire equity market. I don't think people really understand how big that is. Like, MicroStrategy is trading more than Apple, NVIDIA, Google, all of the top tech companies that are rated top 10 public companies. So in my opinion, the volatility that we're seeing is very akin to what would be volatility of a typical top publicly traded entity. So that's kind of personally how I view the stock, is that it's MicroStrategy itself is a top 10 publicly traded equity, but it's just ranked 100th right now. So eventually it will be kind of trading up in the upper echelons there. So anyway, we had a couple incredibly large weeks the last couple of weeks. So 2 weeks ago, right after the earnings call, Michael Saylor announced that they raised $2 billion via ATM, and they purchased 27,200 Bitcoin. The following week, last week, they told us that they raised $4.6 billion and purchased 49,874 Bitcoin. Now, this week, we saw trading volume that was more than double last week. And on top of that, we also saw a $3 billion convertible bond raise. So we know that Saylor has got some dry powder, and we think that there's a very high likelihood that we're going to get another announcement next week, either before Thanksgiving or maybe the day after Thanksgiving, with a large additional Bitcoin purchase. Why I think this is important is because there's enormous information asymmetry here, where Saylor has the ability to tap the ATM and to generate income when there is really large trading volume in the market, and use that to purchase Bitcoin and add to the balance sheet. Now, the one thing that the short reports and everybody else that is barely following the stock and thinks they know what's going on, they have no idea how much Bitcoin Saylor is buying behind the scenes. Nobody knows how much Bitcoin Saylor is buying behind the scenes. So you know that he's doing it, you just don't know how much. And so I think there's going to be a situation where next week there's a large announcement that catches a lot of people by surprise. And what the purpose of getting on this call and chatting with Dan is to walk through some of the math on how big we think that Bitcoin purchase may be, so we can begin to estimate where this might go. So anyway, without further ado, I'll also pass it over to Tim. Give us our little not financial advice, and we'll keep going forward.
Yeah. Happy Friday evening to Jeff and Dan. And
cheers.
Cheers. None of this is financial advice. But yeah, appreciate everybody tuning in. And it's going to be it's been a big week. It's going to be a big week next week. And yeah, excited to be along for the ride.
Yeah, and Tim, you got a couple podcasts dropping next week, so we might be a little quiet on the MSTR True North front, but we've got content that's being pushed out, already recorded for everybody's listening pleasure, and obviously everybody's got a bunch of green candles on their on their brokerage accounts to share with their families and share about their bountiful harvests next week. So
absolutely, if I can take just a second.
Yeah. Give a
one
plug.
One of the accounts, I think it was Blake, mentioned today, and I'll have to go back and retweet it. He said something to the effect of the episode that we did with Ethan, who's the gentleman who introduced the proposal for the Microsoft vote.
Oh yeah.
He said, this is like a huge deal and everyone needs to like listen to this and share it. And it's just like everything. I mean, he shared about his private meeting with Michael Saylor and that he gave up his spot so Saylor could do the 3-minute presentation to Microsoft. I mean, it's pretty in depth and it's really informative as far as what every single Bitcoiner can do to go talk to not just Microsoft, but other organizations, BlackRock, Fidelity, institutions that they're probably a customer of, where they can make their voice heard. And if you own one share of Microsoft, you can go vote your shares yes. And so they walk through all of that. They walk through the process. They walk through the behind the scenes of that. And I probably under promoted it. So yeah, definitely check that one out in particular.
Yeah, I mean, we're going to start seeing this on every single board of directors meeting, right? Especially if it's as simple as we think you should assess putting Bitcoin on your balance sheet, right? That's not harmful at all. It's worth putting in some effort to analyze it. I need to watch it myself. My plan is to watch it over the weekend or sometime next week. I encourage you guys all to take a peek. Those are the people that got the proposal to the vote. So we're gonna see this a lot more. Vote with your dollars. Cool.
Absolutely.
Awesome. Thanks, Tim. And you've got a couple other podcasts that are being released, but yeah, definitely good to promote that one.
Yep.
Excellent.
Awesome.
All right.
All right.
Let's jump into Dan. We've got your spreadsheet. Let's jump into it. I've got one too. I know it's nitty gritty. It's actually just back of the napkin math on Excel, but let's jump through yours first and we'll walk through this. Maybe I'll go full screen. Maybe I'll just go as big as we can possibly see this. Oh, that looks even smaller. Maybe we'll go like this. Perfect.
And Jeff, just stop me anywhere to.
Yeah. I'll chime in.
So the goal here was to just figure out, okay, what percentage of daily traded volume for MicroStrategy stock in dollars was used to purchase Bitcoin, assuming that all of that purchase was done via ATM, considering there was no convertible debt offerings in the first 2 weeks of November. So I include November 1st, the day after their earnings presentation and the 21-21 plan in the first week here. And after that first week, they purchased 27,200 Bitcoin with $2.03 billion worth of cash. And that meant that about 0.07%, 0.07 or 7% of that total traded volume over that week, using the close price of MicroStrategy and the daily volume in millions of shares. Again, 7% of that total traded volume was translated into Bitcoin purchased directly via MicroStrategy.
Yeah. So let's give the viewers an overview of what's going on here. So we've got the dates traded over on the left-hand side. The second column is daily volume in shares. So this is millions of shares that have been traded. This isn't like just buy side. Like this includes everybody that's trading this on both sides. Like
the shorts, the converts, anyone. Yeah.
Shorts, converts, any retail, any institutional buyer, anything that's on index funds, dark pools, etc. So this is all of the shares in the market that have been traded. And one thing just visually to take a look at, and just looking at these dates over on the left-hand side, just visually, like that first week in November, so November 1st to November 8th, just eyeballing the average there, it's something like maybe 21 million shares traded, just eyeballing the average. And then you go to the next week, November 11th through November 15th, and you eyeball the shares there, and that's more like 30 million shares. It's 30 or 40 million shares on average. And now you go to the following week, November 18th to 22nd, the week we're in right now, and it's more like 65 million shares traded. So we're seeing a significant increase in the volume of shares traded, which is pretty incredible, especially noting that MicroStrategy was the most traded stock definitely on November 20th and November 21st. So pretty crazy there. So going to that third column, Dan, if you don't mind scrolling up just a little bit. So this is MSTR price at close. So the most appropriate way to do this is probably to pull, volume weighted price or something like that. But pulling the closing price gives us a good proxy of like how many dollars were exchanged hands each day. So you can
It also
see.
tends to be conservative.
Yeah, right. That's probably conservative, right? Because I don't think any of those days did MicroStrategy stock price close at its high.
Yeah.
So that's a good point, Dan. So back to Dan's point here. The first week, Michael Saylor came out on November 11th, and he said we bought 2.03 billion in Bitcoin, or we raised 2.03 billion, and we bought 27,200 Bitcoin. So what Dan's math here shows is that the Bitcoin purchased relative to the total volume traded is roughly about 7% of total volume. So we wanted to use that as a proxy. So let's go to the next week. So the next week and Monday, Saylor came out and he said, we raised $4.6 billion and we purchased 49,874 Bitcoin. So can you go down just a little bit, Dan? Yeah, perfect. Okay. So yeah, 4.6 billion raised and purchased 49,874 Bitcoin. That actually, you know what? I'm going to move us. Oh, hold on. Shoot. Where'd it go? So that was also about 7% of the total traded volume for that
It's
week.
funny how they align quite perfectly. Like, we're doing napkin math, but everything we're doing here is standardized. Like, we use daily close volume, we use the million shares on Robinhood, and it was 0.7 it was 7% that first week, including the one Friday after earnings, and it was 7% last week. Like, I think that's kind of uncanny, but
it is pretty interesting, right? Because it captures all of the trading volume.
Exactly.
So
it is a good average. It's a representative average.
Yeah, absolutely. Yeah. Oh man, it happened again. Shoot. Okay, so the whole goal here was to figure out, okay, how much of the trading volume was ATM the last 2 weeks, and we wanted to get an estimate. Okay, if that's the same amount of volume this week, how many Bitcoin do we estimate Saylor to announce that he purchased on Monday, Tuesday, or Wednesday next week?
Exactly.
So go ahead, Dan. I'll kick it back over to you.
No, that's exactly what we were trying to do. And so this column here sums up the total volume traded in dollars, again, using the close price, and the daily volume in share count. Here, this is in millions of dollars. So that's $92 billion traded this week. If you assume the same 0.7 multiple, or 0.7 of total volume used to acquire Bitcoin, then you can just use the average Bitcoin price, which I used at $98,000 a Bitcoin, $98,000 a Bitcoin. And so again, that same 0.7 or 7% of the total volume used in USD to purchase Bitcoin at the current market value of $98,000 puts them at around 93,600 Bitcoin on the week, if the ATM issuance was the same this week as it has been the past 2 weeks. And that would also put them at 73% of their total ATM, $21 billion in total. So for reference, the first 2 weeks of November, they used 31.4% of their ATM issuance in the first 2 weeks of November that they're approved of for the next 3 years.
3 years. Well, and now he's got this kind of shelf issuance. So I think there's a permanent threat of, if they use this $21 billion of ATM, I think he could go back and just do another one.
I think you're right. I think
he's got got this trading relationship now, and he can go right back and just raise another one, which is just totally insane.
It's insane. So, and then the convert, we didn't even talk about the convert.
So hold on, we'll get to the convert in a minute. Let's play with the numbers a little bit for funsies. Let's just take a conservative estimate. Let's just say it's not 7%, right? But there's a bunch of shit that happened this week. Let's do 5. Let's do 5%. Okay.
Like, maybe they didn't sell on the big short day.
Or maybe we're getting clouded by the convertible bonds. Maybe there's just maybe they didn't sell on the days that the convertible bonds hedged. Or
I like that. I like that idea. Let's say they didn't sell on that day or something.
So let's just say it's 5%. If it's 5%, and what's your Bitcoin price that you used? 98,000?
98,000.
Okay, let's use 100,000 just to make it simple. Let's just say because if we think he's buying over the weekend or something, like, and it runs to
Yeah, we can
100,000,
use.
we gotta
Yeah, we
let's
can
use
use
100,000.
105.
105,000. So we're being conservative here.
Conservative.
Yeah.
Yeah.
So let's just say that Sailor sold 5% of daily trading volume, and we've got 105,000 Bitcoin price. So we're trying to go conservative on both ends of this, and we're in this circumstance. If he traded, or if he used the ATM for 5% of the volume of last week, what's the total capital raised? Is it 6.4 billion? Is that the number right above it?
Yeah, this is.
Yep. Okay.
Is it right here?
So that would be
6.45.
6.4 billion raised from the ATM, which would at a Bitcoin price of $105,000, that would result in 61,530 Bitcoin purchased. Holy moly! Oh my god! Which is bigger than the last 2 weeks combined. Is that bigger than the last 2 weeks combined?
No. It's 70 last week combined, right? Because it was 50,000 Bitcoin second week's 27,000 Bitcoin first week.
So it's damn near the.
But it could well be bigger than the two combined if you don't use these conservative figures.
All right, so let's take the opposite side. Let's go bullish. Let's go bull-tard on everybody here. So let's just say they did 9%.
What if 8? Let's do 8.
8? You like 8? Okay, let's do 8.
I like 8 because they did the converse and there was the sell.
Right.
Let's do 8. Yeah.
Let's just say it's 8.
100K Bitcoin price. Let's use a 100K Bitcoin price.
Okay,
or,
I like that.
Let's use a 98.
98. All right, so let's play this out. Let's just say Sailor sees the short report, and he says, "Okay, I see that you're shorting my stock," and he says, "I'm going to play along with this whole thing. I'm going to make you think you're right, and I'm going to tap my ATM and make my share price go down, so I can give all of the other holders an opportunity to get back in lower." Meanwhile, you're confusing the people that are taking the short on this. And wow, I mean, this is getting totally crazy, but you can confuse them and make them think they're right. And then all of a sudden you announce you purchased 100,000 Bitcoin over the weekend on Monday, and you just totally wreck their entire trade. Like, all of your models are completely broken. And I think Sailor's having a ton of fun with this now because, there's so much information asymmetry, and it's like anybody who's trying to trade,
like, no one in their right mind would keep a short open when they're about to increase their Bitcoin by potentially 30% over the weekend.
Right? They just don't know though, right? Like, you got to think they don't know, or they closed already.
I think they closed out their position. I think anyone who shorted closed out end of day.
Man, I don't think you think they just shorted it for a single day? Maybe.
Yeah, like Gareth Soloway style. I think people just, and that Wall Street bet guy, like, I think even those big hedge funds, I think they know what they're doing.
Yeah. Well, it's funny, the Wall Street Bets guy, I saw somebody had sent me some information on them that, like, they were indicted from, they were like in a ton of trouble, or they're in some lawsuits about doing similar tactics to what they did here, but they'll go and tell other hedge funds that they're going to do it. So it's not just Citron that's doing it. It's likely Citron and a couple other hedge funds that would follow them. And especially it's so crazy. It's like these guys are like leeches
selling, right?
They're just like they're total leeches on the whole system. And
I don't know also they made 12%, or, well, I guess they could have levered up, but it's like, why not just hold the stock?
It's penny, dude. You're picking up pennies in front of a steamroller. It's crazy. It's totally insane that you do that. But, like, if you know the information now, and I'm sure Sailor's probably got some tactics here, like, stuffed up his sleeve. But if you know that if you're going to raise a bunch of convertible debt, and you know that the bonds are going to hedge, like, that's the perfect time to do it. Like, if you know that, if you know that, like, everybody's going to delta hedge 70% of the convertible bonds. So what that means, everybody that's listening, the bonds are super volatile. So when the bonds get issued, let's say $3 billion, when $3 billion gets issued, the convertible bond holders, the arbitrageurs, will sell 70% of that $3 billion short. So they'll go sell $3 billion of stock out on the market. The reason they do that is because it hedges their downside. If the price of the stock goes down, they make money. If the price of the stock goes up, they make money. They're hedging their downside. That's the whole purpose of this whole convertible debt offering and the issuance, is that you're getting Bitcoin exposure, but you have minimized downside and kind of capped out upside and a time horizon. So it's a structured financial product that is that's interesting to most of these holders. While we're on that topic, before we talk about how much the convertible debt will let them buy, while we're on that topic, Allianz purchased 25% of this $3 billion convertible debt issuance, which is absolutely massive, right? Allianz is the largest insurance company by global assets in the entire globe, right? They're absolutely enormous. So that participation, by holding that convertible debt on their balance sheet, they effectively get Bitcoin exposure and they have ability to leverage against it. So this provides a hedge against monetary debasement on their portfolio. If they were to try to put Bitcoin on their balance sheet, they don't get any credit against it. So you can't leverage against it with your entire portfolio. So I think there's an enormous market for insurance companies buying this convertible debt because it provides them the exposure that they need on their balance sheet for protecting against debasement. So anyway, Dan, I'm going to kick it back over to you. Let's go into how much Bitcoin we think they buy from the convertible debt, and we'll just sum it all together and we'll say Bob's your uncle.
Yeah, after fees, I was reading the statement. It looked like they had $2.97 billion worth of capital raised from the convertible debt at a Bitcoin price of 98,000. That puts you at 30,300 Bitcoins purchased. For a grand total.
What was your Bitcoin price that you used on that one?
98,000.
98,000. Okay, cool. Yeah, keep going down.
Go 9,900, but I think
sure.
It looks like 30,000.
Can you scroll up a little bit? Our screens are like right on the.
I wish you could gotcha. Thanks. Yeah, gotcha. Here you go. Can you see
right
now?
There. Yep.
Yeah, there you go. So convertible debt proceeds, 2.97 billion. Bitcoin price of 99,000, 30,000 Bitcoins purchased. And this is the sum of our bullish scenario here with 105,000 Bitcoins purchased over the course of the week and convertible debt. So it seems like it's 100,000 Bitcoin purchase would be in the cards. And I feel like that's something he'd be looking to do.
Oh my God, that's insane.
Go down in history.
Yeah, that would go down in history too. Oh my God. So let's go back to the conservative scenario for the let's just do 5% for the ATM. Let's say it's 5% of daily traded volume. And let's just assume, yeah.
Or you want to use 100,000 Bitcoin?
Let's just do 100,000 just to make it simple math, and just to make it so people don't think we're stacking the deck here.
Yeah.
Okay.
So that puts you at 94,000 Bitcoin.
94,000 Bitcoin.
5% of daily traded volume. Yeah, I think that's super reasonable.
Isn't that crazy? That
be bigger than
listen to that sentence you just said. I think that's super reasonable. I think it's super reasonable that the Sailor is going to buy 94,000 Bitcoin and announce it at some point next week. Wow.
Well, and then Jeff, it goes to your point, that whole the NASDAQ inclusion NASDAQ inclusion window coming up at the end of next week, and if they stop tapping the money, like things will go bananas. Absolutely
Right.
Bananas.
So that's a great point. That's a great point. So and maybe we'll just kind of shift.
He's obviously coordinating this. Like he saw his window of opportunity where the Bitcoin price had run away from him, and he decided to use all of the ATM issuance because it was easy and simple for him to do in a short period of time. I think.
Yeah,
it was very opportunistic.
This thing has been, this whole month has been planned for probably a couple quarters.
You're absolutely right.
I would assume, right? Because think about it. The $42 billion announcement, he's like, okay, Q4 is going to be nuts. Everybody's going to be jacked, right? We've got the election. If we think the election's going that way, and we've got all these positive things happening, and the QQQ moment is pretty big too. And if you have the ability to raise a ton of capital and start, turning the volume up into a QQQ rank day, like you do it, right?
Yeah, you do
the,
it. You absolutely do it.
and the way you do it is you just keep buying Bitcoin. And if you have access to like these capital markets to like that are just keep giving you money to go buy Bitcoin, you just keep doing it. And you like try to get such a high ranking next Friday because of your Bitcoin purchase. So I wouldn't be surprised, Dan. I wouldn't be surprised if he's raised 5% of the daily traded volume, but maybe he's raised 7, but will only announce that they've purchased like 5, if that makes sense, just to leave dry powder for the whole week, right? I can imagine a scenario where Bitcoin pumps this weekend. I've got a feeling Bitcoin's going to pump this weekend, and we get an announcement on Monday or Tuesday that MicroStrategy has purchased, 100,000 Bitcoin or whatever that may be. And all of a sudden, boom, your models are broken. Anybody who's short here is like, oh my God, I'm so shit out of luck.
MNAV's at like 2. MNAV's yeah.
Well, that's, I was talking to Richard Byworth about this, and people are trading the NAV here, right? And that's where this whole thing gets so crazy, is because, well, I don't know what the NAV is at the end of the day today. It's like 3.5. Actually, you know what? I'm going to pull that up. I'm going to pull that up because I think it's worth just showing it live. Oh my God, I have like 100 tabs open. Let me close all of these. I'm going to do MSTR tracker.
That doesn't subtract out liabilities, right? I can never remember.
Yeah, honestly, I don't think it matters. The liabilities are so small relative to their, it's negligible relative to the holdings. Give me a second. I'm going to pull this up and we'll talk through it. And because I think once you see this, it's kind of hard to unsee it. So I will share my screen here. Let's do that. And we'll share my screen. Entire screen. Bingo. Okay, cool. Right. So what are we at today? Will this let me click on it? Yeah. Okay. So it says NAV premium 2.896. A couple days ago on 11/20, NAV premium was 3.4, and that's what was 11/20. Right. Okay.
Yeah,
so
with a Bitcoin announcement, with a Bitcoin purchase announcement, that will instantaneously compress the NAV multiple even more.
Yes.
Because they own more Bitcoin per share. So that will be lower on Monday at open if an announcement comes. Exactly.
Yes. And I think people are trading this. And so when the NAV, so if Saylor announces that he purchased 100,000 Bitcoin and the NAV technically instantly falls,
good point, yeah.
Because it will instantly fall, right? The NAV, that metric will instantly fall. Let's just say it falls to 1.5. All of a sudden, everybody who owns this stock goes, holy shit, this stock is totally undervalued. It was trading at 3x NAV yesterday, right? And so what do? You go long, right?
Yes, the entire market goes long on open Monday.
The entire market goes long the stock because they're like, oh my God, this thing is slingshot undervalued. Like I'm going long. And likely the price of Bitcoin behind it is running at the same time as well. So really, in my opinion,
60% BTC yield for the year.
Right.
When he announces that, he'll have a 60% plus BTC yield for the year.
Probably
if he makes
more.
Probably more.
Probably more.
And then and people are starting to catch on that this is earnings. And I've started to see some of
this is earnings, dude.
They're like, oh, this is earnings? Wait, and it's growing at 60% a year? What? So I think it's starting to get into people's brains.
Yeah, and the interesting thing is like, and you can see it in this chart here, every NAV peak sets the floor for the future peak.
Yeah. It's just a straight trend up. It's a linear trend to the right. The NAV here.
But look, like you set in a local bottom here and you're coming up. It isn't peak over this. You're like coming up. This is like, you could almost trade it, right? Just like people trade other charts where it's like high, low, high, low, high, low. And it never bottoms again. Like we never got back to this NAV premium of like 1.4 that we've seen in May.
Yeah.
Right. And every time peak, low, peak, low, peak, and it's like the low never goes below the previous low and the high goes above the previous higher high.
Yeah, exactly,
it's like this kind of, and what I I view this as personally is the consolidation. This is where you see index ETF power, right? As these as the market cap grows, as they get included in more index ETFs, you get more passive buy side volume that's setting the base, right? Like your foundation is just like rising of people that are never going to sell
completely
because they just don't know they own it, right? Like everybody's got this in pension funds and insurance companies, banks, everything, and it's just like rises the foundation, and everything else is just whatever's trading at the margin. And I think that's why we see this trend upwards just generally from this entire screen. Like this is all of 2024, right? So, hold on, I'm just going to post this one. This is great. We're getting some good feedback in the chat. Sorry, we haven't focused on the chat at all. There's just the two of us. We're cruising. And yeah, man, this is going to be
just insane.
This is going to be a crazy couple of weeks. Just some other back of the napkin math, because I think this is fun, and I'll share my spreadsheet. This is what I'm showing on my screen. Oh man, I'll make it bigger. Okay, so over on the left, over on the left, I was doing the same math that Dan was doing. I was getting to this kind of as if numbers of dollars raised, but there was a momentary freak out in the market this morning when everybody thought Berkshire Hathaway bought the convertible debt, but that was that was definitely wrong. Allianz purchased the convertible debt. What this list is a list of the top 11 insurance companies by assets. Okay, so we've got assets here. Allianz has $1.2 trillion of assets. So the purchase today, Allianz purchase of the convertible debt represented, you can see it in here, it's 0.059% of their total assets.
0.059. So
0.059%.
Okay, so that doesn't even register.
Doesn't even register. Tiny. Yeah. It's like we're talking 735 million part of 1.24 trillion.
And it will be the top performing asset that they own over the next
for sure.
5 months.
For sure.
A healthy margin.
Hands down. Yeah, by a healthy margin. Okay.
So do you think they'll buy more, Jeff? What do you think?
Yeah, they're going to buy more. But the reason I pulled this analysis together, I was like, okay, what if all of the other top 10 insurance companies took the same allocation? They bought the same amount of convertible debt. It's 0.059% of their entire assets, and they bought the convertible debt. In that circumstance, you'd have $4.8 billion of demand.
For convertible debt?
For convertible debt. Yeah.
Okay.
So you'd have $4.8 billion of demand from convertible debt if the top 10 alternative insurance companies took the same allocation to MicroStrategy convertible debt as Allianz did. That would be $4.8 billion of accretive new convertible debt. So the whole purpose of this is to show the scale here, right? Like these capital pools are so deep, so deep. And then I wanted to pull all this information together. So, right, just these top 11 insurance companies, they have $9.4 billion of assets. Maybe I can make this bigger.
9.4 billion. Okay.
People probably can't see this. You got 9.4 trillion.
Okay.
Trillion.
Yeah.
So let's just say.
Can we use 1%?
Yeah, 1% is 94 billion. 94 billion. That would be the demand for MicroStrategy convertible debt. If all of the insurance companies, the top 11 insurance companies, did 1% of their portfolios as MicroStrategy convertible debt, you'd have $94 billion of demand for convertible debt.
And that's just the tip of the iceberg, right? If those companies were willing to make that sort of allocation, every hedge fund on the planet every family office, everyone would want a piece.
Everyone's going to front run insurance companies, right? Like insurance companies, let's be honest, they're really slow. Like Allianz, some of the German companies are fast in what they're doing, but like Berkshire Hathaway, they're like Warren Buffett's going to die before they put MicroStrategy convertible debt on their balance sheet, right? Like some of these companies will move really slow, but this is just insurance companies.
Yeah.
We're like we're not even talking about banks, pension funds, family offices, hedge funds, corporations, like
Yeah.
anyone else. And this is just the top. This is top 11 global insurance companies. There are, I don't know, 2,000 insurance companies in the globe, probably, maybe 1,000 ish. There's probably 100 trillion, maybe 100 trillion of assets that are tied up with insurance companies. Maybe, I would think.
Mm-hmm.
I think that sounds about right. So anyway,
Yeah, this is the best way for them to get access to Bitcoin, as you said before, right? It's the only way for them to get access to Bitcoin. It's the only way they can borrow, they can lend against it, right?
Yeah, it's not really like lending. It's just I like to think of it as like levering against it.
Okay.
Because so how it works is maybe I'll pull up my presentation. I did a
Is this a work presentation?
no, I did a presentation at this Minneapolis Bitcoin meetup. It was awesome.
Oh, cool.
Yeah, maybe I'll share a slide. I think it's really cool. Let's do it.
Yeah,
You have time, Dan?
I got plenty of time. All the time in the world. I'm waiting until Monday.
Okay, cool. Well, I'll show my slideshow because this is pretty cool. So let's go back to my screen here. Let's make this bigger. That's not much bigger. Let's make that bigger. Okay, cool. This is good. Can you see this?
Yeah, I can see it.
Okay, cool. All right. So this is from my presentation that I gave to the Minneapolis Bitcoin meetup. Holy moly, we have 15,000 people watching this.
Really?
All right. Happy Friday. It's like just as much as Wednesday.
We should have done this 30 minutes before the market closed, so we can go long it.
Yeah, exactly. Well, people are gonna watch this and go long over the weekend and buy on Monday morning. So anyway, this is the leverageability of a balance sheet in insurance. So I wanted to compare two insurance companies. So on the left hand side, you've got insurance company A. On the right hand side, you have insurance company B. So insurance company A, and let's just say they both have $250 million of assets. Okay. So they both have $250 million of assets. And
really break this down for me. That's stocks, bonds.
Yeah. And
real estate, whatever.
Each one of these rows, you can see the asset here. And I broke down,
I got you. Okay.
I broke down two different insurance companies, and I just assumed that they allocated assets slightly differently.
Okay.
Yeah. So on insurance company A, over here on the left-hand side, let's just say they hold $100 million in cash, $50 million in rated treasury bonds, $50 million in rated publicly traded company bonds,
got it.
$0 in unrated bonds, 25 million in equity, and 25 million in Bitcoin.
Okay.
And you'll notice I have these sorted from like least risky to most risky.
Mm-hmm.
Okay. And so then I have this leverageable dollars column here next to it. This is an example of like the calculation that goes into how an insurance company can leverage their balance sheet, right?
Right.
So this is not perfect, but it's just a mathematic example.
Now, I don't know anything about insurance. So when you say leverageable dollars, what does that mean?
So basically, right, each one of these assets, cash, bonds, like rated treasury bonds, publicly traded bonds, equities, they all have different volatilities, right?
Right.
So if you had an event, let's just say you had a catastrophe and you needed to liquidate assets in order to pay for the catastrophe.
Because someone files a claim, right? Or
someone files a claim, you need to take into consideration like what's the probability that my assets aren't worth what I think they're worth when I need them.
Right. Okay.
So you always know
there's a probability associated with how many claims get filed or once, or how big the event is, right? There's
correct
a lot of different probabilities. Okay.
Correct. Yeah, you nailed it. But like cash is not volatile, right? You know what cash is. So if you have
that takes out a risk, that the volatility risk is taken out of the equation. So it's very simple and leverageable in this case.
So basically you can leverage almost 1-to-1 on cash.
Okay.
Right? Like how much risk you take on, you can almost leverage 1-to-1 on cash.
Right. Gotcha. Okay.
So, but you could see and I have this column here, regulatory credit. So these numbers aren't perfect, but they're pretty close on how much credit you get on your balance sheet for holding these types of assets. So like how you can leverage against it. Right?
Yeah.
Makes sense. So
Makes
each one,
Bitcoin 0 and cash is 99. I'm following. And then
yep.
treasury bonds, is that because why would they be 85% as opposed to cash? Because they're not as liquid?
Yeah. Again, this is just a proxy. It's not perfect, but like this is just how much credit you need to take into consideration on your balance sheet.
Perfect.
It's close. Okay. So what I did here is I took the value of each one of these assets and I multiplied it by the regulatory credit to give you a leverageable dollars. Like how many dollars can you leverage against on your balance sheet, right?
Yeah.
So in this circumstance, insurance company A, if they were to put 25 million of Bitcoin on their balance sheet, you don't get any regulatory credit for it. So you have leverageable dollars of 0.
Gotcha.
Okay. So your total leverageable dollars, let's just say it's 190 million.
Okay.
Okay. Now over here, example B, the same bucket of assets, right? The same regulatory credit as outlined on the left-hand side. But instead of having equity or Bitcoin, I just said, okay, let's just pile in $50 million into unrated bonds. This MicroStrategy convertible debt.
Actually, a convertible bond offered by MicroStrategy.
MicroStrategy convertible debt is an unrated bond. An insurance company can get effectively like 55% credit on their balance sheet for holding an unrated bond like this. Okay.
Yeah.
So in this instance, insurance company B over here still has Bitcoin exposure. They don't hold Bitcoin per se, but they now have leverageable dollars of 206 million.
Gotcha. Wow.
Okay.
So they actually have higher performance Bitcoin exposure in the form of convertible debt while having more leverageability because it's convertible debt.
Yes.
So
this is why this is such a big deal.
As long as this regulation scheme continues, there is no reason for one of these insurance companies to ever buy Bitcoin as opposed to this convertible debt in theory.
Correct. No, you're 100%. You absolutely nailed it. Because like, what is an insurance company? Insurance company is an asset allocator, right? You have to. So what I'm showing here is in this instance, your leverageable dollars increases by 8.5% by holding MicroStrategy convertible debt instead of Bitcoin. And that's $16.2 million. Now, how insurance companies work, this is the real kicker here. Insurance companies are allowed premium leverage. Okay. So they're able to write 3 times as much premium as assets that they have on their balance sheet. There's different leverage.
Okay, gotcha. Yep.
So you can
That's
have
the whole business, right? That's the whole
business model. You get a float, like you get the premium in today, and you pay out a claim in the future, and you've got a float between the premium that you take in and the liability that you got to pay out at some point in the future.
Right. Gotcha. Okay.
Right. So in this instance, let's assume your average premium leverage is 3. So you're able to write three times more premium in the door than you do have assets on your balance sheet. So now I direct your attention to the very top here where you got total premium written. So when you compare insurance company A to insurance company B, insurance company B can write about $50 million more premium in the door than insurance company A because of the leverageability. I'm going to pause right there. What
percentage did you say? 3. Or what's the percentage change from 570 million to 619?
Oh, I just said 50 million.
50 million more. Okay, gotcha.
50 million more. Yeah.
But you can imagine at scale, right? Like for one of these giant conglomerates, if they're actually putting this in place, like this is a massive amount of increase in premium written.
Yeah.
Because they have billions, trillions of dollars on their total premiums written is in the trillions, right?
Well, yeah. I mean, there are smaller insurance companies. Yes, there are really large insurance companies, right? I'm just giving an example. This is probably like the size of a super regional insurance company. This is like maybe somebody that writes business in the western half of the United States or something like that, and just writes homeowners or commercial business or something like that.
Cool. Okay.
Yeah. So you can really see how there's no benefit of putting Bitcoin on your balance sheet, right? Like that's the whole purpose of showing this. Like right now, there is regulatory arbitrage.
Yeah.
Because the regulators don't give you any credit for putting Bitcoin on your balance sheet, it doesn't make sense holding it. Even though you may like totally believe in Bitcoin. It's like, I love Bitcoin. I hold it for myself. I love MicroStrategy, whatever. I'll hold it for myself, but I can't put it on my company's balance sheet because I can't get any credit for it. Right? Now, that's where this solution with MicroStrategy convertible debt makes a lot more sense. Now, I've had a bunch of people that have come after me saying, well, what happens when Bitcoin becomes regulatory approved? Well, Bitcoin is still volatile.
Yeah.
Right? Bitcoin's still really volatile. So if Bitcoin did get approved, the capital charge that it would have on a balance sheet would still probably be less than an equity. So
the regulatory credit in this column would be like 10, 15,
25 maybe. Yeah, maybe 25%.
So you'd still have a huge advantage holding these convertible bonds. So that makes sense.
Yes, absolutely. Because it's debt. It's debt.
Yeah.
You have minimized downside and you have equity-like upside.
Yeah.
Some people have also asked, like, oh, will FASB change this? No, FASB fair value accounting is accounting. That has nothing to do with regulatory bodies in the insurance market. I think the insurance world would probably be a little bit behind on how they address this kind of regulatory situation. Pretty crazy, huh?
Yeah, that is nuts. Well, it goes to show you, like, everyone talks about how oversubscribed these bonds are and how valuable they are, but this is a clear reason why they are so valuable. Like, I never really understood why people would want them except for like downside protection, but this makes complete sense.
Yeah, like, so think of Allianz. Allianz just bought $750 million of this stuff because they're like, hell yeah, Bitcoin, but it's not Bitcoin.
Yeah.
Like I could leverage against it. I could put this on my balance sheet and I could write more premium while also hedging my downside.
It's almost designed for these companies. Like these convertible bonds are literally designed for an insurance company like this.
Yeah. Yeah. No, that's exactly it. That's exactly it.
Or really anyone. Yeah, I would hold them. I would hold them personally.
Right.
I could. Yeah.
I think that would make sense. And I think I did one more thing that I want to. Can I zoom in on this? Maybe I can't. I am going to show one more image here. I did some math earlier. This is on my other computer, so I gotta go find it. But oh, there it is. So here we go. We just minimize everything else. Give me a sec. So I was doing some math because I'm gonna make a LinkedIn post. I think LinkedIn needs to find out what's going on with Allianz on this stuff because it's pretty big. But maybe I'll make this a little bit bigger and I will share my screen. I'll turn this back on. Okay. Whew, here we go. Okay. So on what I wanted to do is show the compound annual growth rate of the CPI relative to the M2 money supply and really outline the difference of what's going on here. So what I did is I looked at the math of the last 5-year compound annual growth rate of the CPI is 4.1. So this is the inflation number over the last 5 years that we've seen. And the M2 money supply is 7.5. Yeah, the inflation number is 4.1, but the M2 money supply is 7.5. And if you go back on any of these time horizons, the inflation number is roughly 3%, 3.6% less than how much the money supply has increased, which is pretty crazy, right? I mean, this is just outlining that you have debasement risk happening all the time, like everywhere, all the time. And I think the insurance industry largely doesn't take this into consideration.
Okay.
They use inflation as a guide or a gauge on like what a claim may be at some point in the future, but they're not necessarily taking into consideration like monetary debasement. And monetary debasement being that your money that you're pricing all of this stuff in moves faster than inflation. And I think there's this situation and there's a circumstance where actually it's funny, the insurance industry has created a new term for this. They're calling it social inflation. And social inflation, the idea being that these jury verdicts, so when insurance claims go to court, the juries are now settling with these like really large jury verdicts with like numbers that are significantly larger than inflation. And the industry itself is like confused. They're like, how is this happening? Well, the reason it's happening is because the M2 money supply, there are just more dollars in the system. So yeah, the jury thinks that the reward should be higher because they think that there are more dollars in the system. So it's funny. The industry is calling it social inflation, but it's debasement, and it is monetary debasement, and nobody's really captured it or figured it out yet. And if there's a situation where your expectations of inflation or debasement change very quickly, let's just say the $36 trillion of debt goes to 39 or 40, and the only way you get out of it is by printing more money. All of a sudden you have the entire long tail insurance industry, like workers' compensation, GL, even life insurance, like that entire industry, that entire model is totally broken. Like that industry is eviscerated because you have no
monetary debasement is so significant, and it's working against. It erodes all the probabilities, right? All the probabilities that we talked about to pay out claims based on certain probabilistic outcomes goes completely down the gutter if they're losing 7% a year on their cash, which they're leveraging at 99%.
How do you price it?
Okay.
If your expectation of inflation or debasement goes from certain to uncertain, how do you price for it today?
Oh, that makes sense.
Right. If I'm pricing a claim 5 years from now that I know I'm going to have, I don't know what the claim is going to be, but I know I'm going to have it. Like you can run in the insurance industry, there's just like math nerds everywhere. They're called actuaries. and they're running actuarial math and actuarial science to understand like, okay, for every $1 of premium I'm taking in the door, how many claims I'm going to have at a point in the future. And so that's how they get to like pricing this stuff on the upfront underlying level. And if your expectation or your understanding of what those figures may be at a point in the future, if that all of a sudden goes from like certain to uncertain, then how do you price it? The only way you can price it is if you felt comfortable with your debasement hedge. And so I think in the future, any insurance company that wants to write long tail insurance, if they want to win, you need a debasement hedge. You need Bitcoin. You need MicroStrategy convertible debt. You need some sort of debasement hedge to protect your downside. So anyway, it's crazy.
No, crazy. Yeah. It's a perfect product market fit here.
Perfect product. It's insurance. Bitcoin is insurance. It's insurance for monetary debasement. And the insurance industry hasn't figured it out yet because it's too volatile. And the insurance industry doesn't like volatility. But if they just zoom out a little bit and look at the 4-year compound annual growth rate of money and Bitcoin and just do a quick like glance and say, yeah, this looks good. That's as simple as it is. But unfortunately, there's a lot of work to do. So anyway,
it's crazy. It's exciting.
Yeah, super exciting. Well, we've talked for about an hour. I didn't give anybody love in the chat. Thank you for being here, everybody. Yay, live on a Friday night. Bingo. There we are. Insurance company solution, just don't pay any claims. I guess that's one way to do it.
Could MicroStrategy make a bond ETF to get these bonds to the masses? I know they talked about offering them, or did they talk about potentially offering them in the earnings call to investors other than these private placements?
Yeah, I think
speculate about that. I think it might have been us talking. I can't remember.
Yeah, I think there's a probability that happens at some point in the future where these are offered to a wider audience. I mean, private placement is the easiest way to get quick capital in the door on this stuff. I suspect there's a point in the future where, people are running these bonds around and packaging them up and, providing all sorts of products. So, I mean, the future is super bright. Yeah. So I think that's it. In short, in summary, we think there's a probability greater than 0 that Michael Saylor buys 100,000 Bitcoin and announces it at some point within the next week. It's been crazy trading volume, monumental, historic, totally awesome.
I put it at 60% probability.
60%.
Yeah.
60%. Not 70?
No, 60.
All right. What about 75,000 Bitcoin? What's your probability of 75,000?
The other 40%.
Okay, good. So Dan, thanks for putting together the spreadsheet. Appreciate you taking the time to walk through it. Thank you everybody for taking the time. Follow us, MSTR True North. That's where you can find some information on our Twitter profile. Please follow Dan, follow myself, Tim Kotzman. He's putting out some amazing content. Please take a look at what he's doing. He's getting information. He's just, covering the entire industry, what's going on with MicroStrategy, what's going on with Bitcoin, and really at the cutting edge of what's going on in the industry. So
follow grain of salt. Follow grain of salt. It's gonna be a big week. It's gonna be a big week.
Grain of salt is gonna have a big week next week.
You have a big week, yeah.
Yeah, it's gonna be fun. Also, hey, everybody's gonna have some time. Do a little reading. I highly suggest Broken Money. It's great. The Petrodollar chapter is worth a read. So anyway, catch you all later. Thanks for the time.
Bye guys. Thanks for watching. Always fun, Jeff.